Ever feel like you're just drowning in financial news? Trying to make sense of it all. Or maybe you've wanted to get a real grip on a sector like solar, but it just seems so complicated.
Well, you're definitely in the right place today. We're going to try and cut through some of that noise.
Welcome to the deep dive. And yeah, today we're zooming right into solar energy. It's dynamic for sure, sometimes pretty volatile too, always changing with new tech, policy shifts,
Yeah,
things that, really matter.
right. So our mission today is pretty clear. We want to give you a solid journalistic rundown on three key companies. We're talking Enphase Energy, Sunrun Inc., and SolarEdge Technologies. We'll break down, their financial health, the technical charts, recent news, how they make money, and how the market sees them right now. Exactly. All based on the latest market data. We're trying to connect the dots for you. Now, just a quick heads up, super important. Everything we talk about today, it's purely for information and education, okay?
Yeah.
It is not financial advice, not an endorsement of anything. Investing has risks, big ones sometimes. So any decisions you make, please do it carefully. Maybe talk to a professional. We'll use some hypothetical paper money examples just to illustrate things. It's all about learning here.
Okay, great. That essential disclaimer is noted. Let's kick things off with Enphase Energy, ticker symbol ENPH. They're a U.S.-based tech company, right? Big in solar, focused on home energy solutions.
That's them. They've got this whole integrated system, generation, storage, controls, communications, all on one intelligent platform. Pretty significant presence, too. Last closed at $37.12. This was September 10th, 2025. Market cap around $4.85 billion. They're on the NASDAQ Q, even in the S&P 500. Founded back in '06, IPO'd in 2012, employed close to, 2,800 people now?
Okay, so let's get into the nitty-gritty. How has Enphase's stock actually been performing on the charts? What's the picture?
Well, it's really a story of two different timelines, isn't it? Over the last 10 years, incredible growth, like 740%. But recently, it's a much tougher story. Down over 65% in the past year alone, and almost 46% just year to date. So yeah, long-term success meets some serious near-term headwinds.
Wow, yeah, 740% is huge. But that recent drop,
Mhm.
what did the volatility tell us? You mentioned headwinds.
Well, look at its beta. It's 1.57. That basically means it tends to move, about 57% more dramatically than the overall market. So bigger swings, both up and down. Right now, it's trading way off its 52-week high, like 70% below it. But on the flip side, it is up about 24% from its 52-week low. So it's found some kind of floor recently, perhaps.
Okay, and technically speaking, looking at moving averages and things like RSI, what are they showing? Is it finding support?
It's interesting. It's just above its short-term moving averages, the 20-day and the 50-day. That suggests maybe some resilience lately. But, and this is but it's still way below its 200-day average, like almost 30% below. So that often points to a longer-term downtrend still being in play despite these little bounces. The RSI, the Relative Strength Index, is right around 51. Pretty neutral. Not overbought, not oversold, just sitting there.
So what could trigger a bigger move? Are there specific levels or events people are watching?
Yeah, a couple of things. For some traders, getting and staying above that 200-day moving average, that would be a big signal, maybe a trend reversal. Then again, being closer to that 52-week low might attract value investors looking for a bargain. And here's something else. The short float is really high, almost 24%.
24%. Wow. So a lot of people betting against it.
Exactly. A significant chunk of investors expect the price to fall further, but that also creates the setup for what's called a short squeeze. If some good news hits, those short sellers might rush to buy back shares to cover their positions, pushing the price up rapidly. It adds a layer of potential fireworks.
Okay, beyond the charts, what's the news been like? Any big announcements? And how are the analysts reacting to all this?
Well, on the product front, they're still innovating. They announced new EV chargers, these bidirectional ones, and opened pre-orders for new commercial microinverters. So development is ongoing. But the market reaction hasn't always been positive to news. The stock dropped on September 8th and back in July, too. You saw headlines asking, why is Enphase down today? And analyst sentiment, it's definitely shifted towards caution. Big names like JP Morgan, Goldman, KeyBank, they've downgraded ratings, moved from buy or overweight down to neutral, sell, or underweight. That's a pretty significant shift in how the pros are viewing its near-term prospects.
Cautious analysts. But what about the insiders, the people running the company? Any signals from them?
Yeah, that's an interesting counterpoint. The president and CEO, Bajinoyan Kothandarman, actually made several insider buys in August, April of this year, even back in November 2024. Sometimes, when management buys their own stock, especially during downturns, it can be seen as a sign of confidence.
Okay, let's switch gears to the fundamentals. How healthy is Enphase financially? You mentioned innovation, but does it translate to profit?
It does, actually. This is where Enphase stands out compared to some others we'll discuss. They have strong gross margins, over 47%, and profit margins around 11–12%. That's solid. Positive income, too, about $175 million. And their returns on assets, equity, invested capital, all positive, suggest they're using their resources efficiently.
And growth, what are the projections looking like?
It's a bit mixed. Earnings per share, or EPS, for the next quarter are projected to jump massively, like 244%. Sales are also up quarter over quarter, but looking out to next year, the projection is actually for an EPS decline of about 11%, so maybe a near-term boost, but questions about sustained growth further out.
Right. And how about their debt and overall valuation? Does it seem expensive?
Liquidity looks good. Healthy, quick, and current ratios. Their debt seems manageable relative to equity. Valuation-wise, the price-to-earnings ratio, PE, is about 29. Forward PE, based on future estimates, is lower, around 16. But the PEG ratio, which compares PE to growth, is quite high at 8.38. That sometimes means either future growth is already heavily priced in, or the market has really ambitious growth expectations built into that stock price.
Okay, let's do that hypothetical paper money math.
Yeah.
So you put $10,000 into Enphase right at the beginning of the last quarter, so around June 10th. The price back then was roughly, what, $45.08. So $10,000 gets you about 221, maybe 222 shares.
Right. And we know the stock fell about 17.66% over that quarter. So today, with the price of $37.12, those shares would be worth, let's see, roughly $8,233. That means a paper loss of 1,767%, down 17.67% on that hypothetical trade. And in our pretend $30,000 portfolio across these three stocks, that Enphase position is now about 27.4% of the total value.
Okay, so Enphase, profitable, innovative, but facing serious recent headwinds and volatility. Let's pivot to Sunrun, ticker RUN. Different focus, right? More on the residential installation side. Does that change the story?
It does. Sunrun is also US-based, also solar tech, but yeah, their game is designing, installing, selling, owning, maintaining residential solar systems.
Yep.
Direct to homeowners, last closed at $16.20 on September 10th. Market cap a bit smaller, $3.74 billion. Also on NASDAQ. Founded a year after Enphase, 2007, IPO'd later, 2015. And look at the employee count, over 11,000 people. Reflects that installation-heavy model.
11,000, yeah, that's a big difference. Now, technically, Sunrun's chart sounds like it's been on a tear recently, unlike Enphase.
Oh, absolutely. A completely different short to medium-term picture. Sunrun is up almost 40% in the last month, up nearly 83% over the quarter we just looked up for Enphase for the last 6 months, up 133%. Year-to-date, up 75%. Really strong recent momentum. But again, zoom out further, still down over 71% over the last 5 years. So it's had its own past struggles.
Wow, that's a major turnaround recently. Its beta is even higher, though, right? 2.41.
Yeah, significantly higher. Suggests it's even more volatile than Enphase or the general market. Potentially bigger moves, up or down. It's currently about 25% below its 52-week high, which isn't too bad given the run-up. But check this out. It's over 200% above its 52-week low, so it really rocketed off those lows.
Okay, and the moving averages, are they confirming this strong upward move?
They are. Sunrun is trading comfortably above its 20-day, 50-day, and its 200-day moving averages. That's often seen as a pretty bullish technical signal across different time frames. Strong momentum. Its RSI is around 58, 59, getting closer to overbought, maybe, but not quite there yet. Still room, potentially.
So what's driving this? What's the news? Why the sudden surge compared to Enphase?
Well, there's been a wave of analyst upgrades recently. RBC, Jefferies, KeyBank, raising ratings and price targets in July and August. News headlines in September were talking about it rocketing higher, soaring, mentioning things like potential interest rate cuts helping or strong Q2 earnings. They did beat estimates in Q2. And one analysis specifically pointed to more storage attachments, cost discipline, and, importantly, policy tailwinds helping their performance.
Policy tailwinds. Interesting. So government support or regulations helping them out?
Seems like it, yeah. Like other solar stocks, Sunrun definitely reacts to talk about clean energy tax credits, regulations, even political comments about renewables. It's very tied to that bigger picture.
Okay, and the insiders at Sunrun, buying or selling?
Bit of a mixed picture here, too. There's been quite a bit of insider selling by various officers over the past year or so. However, one director, Edward Finster, made some significant buys back in March and May. So again, maybe some differing views within the company leadership or just different personal financial planning.
Yeah.
Hard to say for sure.
Right. Let's get to the financials for Sunrun. You hinted earlier that profitability might be tougher for this installation model.
Yeah, and that's the key difference compared to Enphase right now. Sunrun is currently unprofitable. Its EPS is negative, around minus $11.62. Reported a big net loss, over $2.5 billion. Operating margins, profit margins, deeply negative. That's a major financial hurdle. Now, the projection for this year's EPS shows huge growth, like 110%, but that's coming off a very low negative base. So it's improvement, but still likely negative overall. Sales growth is there, though, up about 9% quarter over quarter, almost 19% growth over the past 5 years.
Okay, unprofitable but growing sales. How does their debt look, especially for those losses?
Liquidity seems okay for the short term. Current and quick ratios are adequate, but the debt-to-equity ratio is high, really high actually, at 4.83. That suggests they rely heavily on debt to finance their operations, which adds risk, especially when you're not profitable. Valuation-wise, because it's losing money, the PE ratio is negative. The forward PE, based on hopes of future profit, is around 19.5.
Got it. Let's run the paper money numbers for Sunrun. Same $10,000 invested around June 10th. Price back then was much lower, about $8.86. So 10-day would buy quite a few shares, maybe around 11.28 or 11.29.
Exactly. And we saw that huge quarterly gain, 82.84%. So take those 1128.6 shares, multiply by today's price of $16.20. You're looking at around 18,283 cents. That's a paper profit of $8,283. A really strong return of over 82% for that hypothetical quarter. And in our $30 K paper portfolio, Sunrun suddenly makes up a huge chunk, almost 61% because of that big gain.
Okay, quite the contrast between Enphase and Sunrun for that quarter. Now, our third stock, SolarEdge Technologies, ticker SEDG. They're based in Israel, right?
Yeah.
What's their niche?
All right, SolarEdge is based in Israel, another energy tech leader. They specialize in inverter solutions, which are crucial for solar PV systems, but they also do energy storage, stuff for e-mobility, even automated machines. A bit broader, maybe. Last closed at $29.42 on September 10th. Market cap is the smallest of the three, $1.75 billion. Also on NASDAQ, founded in 2006, like Enphase, IPO'd in 2015, around 5,600 employees. The international base is definitely an interesting angle.
Okay, SolarEdge. How's its stock chart looked? More like Enphase or more like Sunrun recently?
Technically, it's actually looked a lot more like Sunrun recently, despite some weekly dips. It was down over 11% just last week, yeah. But zoom out a bit, still up 18% over the month, over 40% for the quarter, 83% for the half year, and a whopping 116% year to date. Huge gains overall recently. But again, that longer term picture, down significantly, nearly 89% over 3 years, 86% over 5. That familiar solar coaster ride. Beta is 1.57, same as Enphase, so higher volatility than the markets. Made a massive move off its 52-week low, up 187%, but still about 17-18% below its high.
Right. So strong recent performance overall, despite that weekly dip. What about its moving averages? Still looking bullish like Sunrun.
Mostly, yes. It dipped below its 20-day average recently, which might be a small caution flag for the very short term, but it's still well above its 50-day and its 200-day moving averages. So that could suggest the longer-term uptrend is intact, and maybe this was just a pullback. RSI is neutral again around 47, not giving strong buy or sell signals right now.
Okay, and the news flow for SolarEdge. Analyst sentiment. What's the vibe?
Analyst sentiment here is actually more bearish, leaning towards sell on average. TD Cowen kept a hold rating. Guggenheim stuck with sell recently. JP Morgan's downgrade in July hit solar stocks broadly, including SolarEdge. The Q2 earnings story is really telling here. SolarEdge reported a loss, but they actually beat revenue expectations.
Oh, so they beat on revenue but still lost money. How'd the market react?
It reacted badly. News reports said the stock plunged or dropped after that earnings release. It really highlights how the market's focus has shifted, you know? Just growing revenue isn't enough anymore, especially in solar right now. Investors want to see a path to profit, or actual profit. And for SolarEdge, even beating sales forecasts wasn't enough to overcome the concerns about the bottom line losses.
That's a key point. Profitability matters. What about SolarEdge insiders?
We saw some buying here, too. The chairman of the board, Avery Moore, bought shares back in March and November 2024. Another director bought in November 24 as well. But there was a proposed sale by a former officer more recently in August. So again, not a completely unified signal from insiders.
All right, let's dive into those financials. You said they reported a loss. How bad is the profitability picture for SolarEdge?
It's pretty challenging right now. Similar to Sunrun, SolarEdge is deeply unprofitable. Negative EPS of almost minus $30, a net loss over $1.7 billion. And here's a big red flag. Their gross margin, operating margin, and profit margin are all substantially negative. That's tough. Means they're losing money even on their core operations before overhead. Now, projections show EPS potentially jumping next year, over 100% growth, but again, from a deeply negative base. Sales were up quarter over quarter, but down significantly year over year on a trailing basis.
Wow, negative margins are definitely a concern. How are they doing on liquidity and debt, given those losses?
Yeah,
And valuation?
liquidity looks okay in the short term, similar to the others. Quick and current ratios are healthy. Debt to equity is manageable, actually better than Sunrun's. Valuation is tricky. Negative PE because of losses. But the forward PE, it's incredibly high, like 750. That implies the market expects very, very minimal earnings in the near future, or that the current price is extremely optimistic relative to those earnings expectations.
Okay, final paper money calculation. $10,000 into SolarEdge, start of the quarter, around June 10th. Estimated price then was about $20.93. So $10 age gets you roughly 477 or 478 shares.
Yep, about 477.7 shares, and SolarEdge gained 40.56% over that quarter. So take those shares times today's price of $29.42. That comes out to around $14,059, meaning a paper profit of $4,059, or just over 40% gain. So despite the profitability issues, another strong quarterly return in our hypothetical scenario. This position now makes up almost 47% of our paper portfolio.
Okay, so we've looked closely at Enphase, Sunrun, and SolarEdge. Stepping back, what big patterns or takeaways jump out across the whole sector based on these three?
Well, first and foremost, volatility is just baked into this sector, isn't it? High beta values, big price swings. These stocks move a lot more than the average stock. That's definitely something anyone looking at this space needs to be comfortable with.
Right, huge swings. And we saw a real split in profitability, too.
Absolutely. A stark contrast. Enphase is making good money, strong margins. Sunrun and SolarEdge currently facing significant losses. Yet analysts still expect some future EPS growth for all three, which is why valuations can seem complex or even disconnected from current earnings sometimes. The market is trying to price in that future potential.
And it feels like they're all really sensitive to outside news, policy, innovation.
Totally. Policy is huge: tax credits, trade rules, government support, big impact. And innovation is constant. New chargers, better inverters. Companies have to keep investing and developing. It shows how critical both external factors and internal R&D are.
The insider activity was interesting, too, kind of all over the place.
Yeah, it wasn't a clear signal across the board. Some selling, especially at Sunrun maybe,
Yeah.
but also notable buys by key people, the CEO at Enphase, a director at Sunrun, the chairman at SolarEdge. It offers a glimpse into leadership sentiment, but you can't read too much into it in isolation.
And that high short interest across all three.
That's significant too. Having 21 to 25% of the float shorted means a lot of investors are betting against them. It signals disagreement in the market about their future, and it definitely adds fuel for potential sharp moves up or down, especially if unexpected news hits. Creates that short squeeze possibility we talked about.
And finally, our little paper money game for the quarter was revealing, wasn't it? The two unprofitable companies, Sunrun and SolarEdge, actually delivered big paper gains. While the profitable one, Enphase, had a paper loss over the same 3 months.
Exactly. It's a great illustration that, especially in a volatile sector like solar, strong fundamentals don't always equal short-term stock gains, and vice versa. Market sentiment, momentum, news flow, they all play a huge role in the day-to-day and week-to-week price action.
So wrapping up, we've seen a sector facing challenges like profitability and policy uncertainty, but also one full of innovation and pretty remarkable recent growth spurts for some players. For you listening, hopefully understanding these different layers, the financials, the technicals, the news, helps you look beyond just the daily ticker change.
Yeah, it's about grasping that complex dance between all these factors. It's rarely simple.
Absolutely. This deep dive really shows how complex and frankly fascinating the solar market is. So what stood out most to you? Was it the difference in profits, the wild stock swings, how much policy seems to matter? We definitely encourage you to keep digging into these dynamics. Think about what they might mean for the future of renewables and maybe for investment strategies too.